So today we're going to be going over, is platinum the investment of the decade? Will platinum outperform everything else? So I start off with the premise that there are four basic investment categories. So we have stocks, which is composed of like the Dow Jones, Nasdaq, S&P 500. We have bonds, like U.S. government bonds. We have real estate, residential real estate, commodities, precious metals, base metals, energy, agricultural. I exclude cryptocurrencies from this. It is very possible that they outperform everything else, but I don't know how to value them, and I don't have enough pricing information to do the 100-year plus historical timescales I like, so I'm just not going to include them. When you compare these investment categories to each other, what you see is that they're generally range bound, because what we generally do is we just look at like the Dow Jones compared to the US dollar, or real estate compared to the US dollar. And in those terms, it basically looks like they're always going up. But when you actually compare it to other real tangible goods like commodities and stuff like that, it's like you actually see that they're generally range bound and they go from overvalued to undervalued. So we're going to start off with precious metals. So I've created a relative valuation chart for the 7 precious metals. Right now, platinum, silver, and gold are at the bottom of the list, and rhodium, iridium, and palladium are at the top of the list. If we go back 10 years, rhodium, iridium, and palladium were actually at the bottom of the list with, rhodium, ruthenium, and palladium were at the bottom of the list. And then iridium, silver, and gold were actually at the top of the list. And if you look at the gains, it's like rhodium from this 10-year period has been up 1,300%, whereas gold's only up about 10%. So I think using these valuation scales can be quite valuable for looking forward on your investments. It's not going to be guaranteed, but I find it's the most solid framework of kind of like real relative valuation that I've been able to come up with so far. So first off, we start with the platinum-silver ratio. So what this is basically you just take the price of platinum going back 100 years, and then you take the price of silver going back 100 years, and then each year you just divide them by each other. And you kind of see that there's a range here that basically sometimes platinum's really undervalued compared to silver, sometimes it's really overvalued compared to silver. And it's just kind of generally trading between the ups and downs of this range. So currently the platinum price is $1,242, and that's putting it right at the bottom of this range. And so if this trading range between platinum and silver went back to the red line, we'd be looking at a price for platinum of $3,000 roughly, which would be a 143% increase. And with all these calculations, I'm assuming that the other commodity that we're comparing it to, or the other asset that we're comparing to, is just going to stay the same price. It's very possible that these prices can come down, and that's what changes the ratio. But I feel like we're in a place where governments really do not want any kind of deflation or the prices collapsing of any kind of asset. So my guess is that all assets are going to increase rather than decrease. So if this ratio were to come back to this red line, basically it would mean that platinum's gone up 143%. And if this ratio were to go to the very max that it's ever been to, like you kind of see right here, it would mean that we have a $5,000 price of platinum, and considering that like the silver price stays the same at about $26. But what I actually do expect is that I expect both silver and platinum to move up together, except that platinum should be relatively outperforming silver. So here we have the platinum gold ratio, and basically again, it's like we have the trading range and we're on the very low end of the trading range. We hit all-time new lows last year. So if we get back to the red line, it would mean about 186% increase for platinum, up to $3,000, $3,500 roughly. And then if we went to if we went back to the all-time high for the platinum gold ratio, it would be about a 938% increase with a price of $12,888. And again, I expect that both silver and gold and platinum are all moving up together relative to other things. It's just that platinum is going to be outperforming the pace. Here we have the platinum palladium chart, and again we've hit new all-time lows last year, and we're extremely overvalued for palladium versus platinum. So if we hit back to the red line, it's about a $10,700 price of platinum and a 764% increase for the price of platinum. And if we went back to the all-time highs, it would be 1,512% increase and a platinum price of $20,000, which would be pretty crazy. And then rhodium, same kind of situation, except it's actually even going further down this year. Rhodium's outperformed this year. So if we went back to the red line, it would mean a $28,000 price of platinum. And if we went to the max ratio, it would mean a $43,000 price of platinum. Again, these are absolutely crazy numbers. So here we go to the Dow Jones ratio. And again, we see that we have this kind of trading range here. And you could argue that this has been in a downtrend, that overall stocks have historically been outperforming platinum. And you could argue that. I wouldn't disagree with it. But I still think that there's a lot of room for a trading range in here, even if it's a downward trading range. And so if we went back to this red line, it would mean that the platinum price goes from the $1,200 right now to about $8,000, which would be a 538% increase. And if we went to the max ratio again, it would mean a price of $25,875. Which would be a 1,983% increase. I'm not 100% sure I did my numbers right. I might have calculated this a bit wrong. I might be doing the ratio to the price wrong. But the general idea is going to be both basically the same, that we're going to have tremendous price increases in platinum as it goes back up. And then we have platinum real estate ratio. So it's basically this platinum and real estate ratio has been traded a lot tighter than some of these other ratios like the Dow Jones. So if we went back up to this red line, we'd be looking at a platinum price of about $3,367. And if we went up to the max ratio of real estate to platinum, or platinum to real estate, we'd be looking at about $10,835 price of platinum. So again, significant increases that we're looking at here. And again, these are increases in real terms. It's very possible that both these assets are going up in the nominal terms of the dollar, but we're making real gains an asset compared to asset. And I think that's really how ideally you should measure the world, is that if you're making gains in like fiat currency, US dollars, Canadian dollars, and stuff like that, but the price of everything else has gone up as fast or faster, it's like you didn't really make any gains on that. But it's like if you make gains compared to other real goods, I think that's tangible value that actually has kind of like lasting kind of implications. So I'm looking for platinum to dramatically outperform all the precious metals. I'm looking for it to outperform the general stock market. I'm looking for it to outperform like the general real estate market. And it's one of the cheapest commodities in historical terms. There are a few others. Corn, sugar, uranium are all also very undervalued, and even maybe more undervalued than platinum at this time. But a lot of these are very hard to invest in, particularly the agricultural commodities. It's very hard to find like good kind of proxies where you can invest directly in it. And then uranium, you've kind of seen a dramatic, like the stocks have gone up 200 to 500%, except the uranium price hasn't gone anywhere. So it's like these businesses have just been bid up, but they're not actually going to be making any money. And it's like you're going to have to see the uranium price go up to 60, maybe $100 per, I think it's measured in pounds, before these companies can actually start making money. And I really think that they need to be making like, I'm not sure, probably about $130, $150 per pound for like a lot of these companies actually to be like very cash flow positive and doing well, but tough to say. Potential reasons for platinum's outperformance. I believe that the precious metal as a sector will outperform bonds, real estate, and stocks. I think that we're moving to a world with far too much debt and not enough cash flow to support it. And I expect a flood of bankruptcies to occur over the next 5 years. And precious metals aren't financial assets. They don't have counterparty risk, and I believe that this is going to be an increasingly popular proposition going forward, because I think that what's going to happen as like you have this flood of bankruptcies is that our governments are going to go into a money printing spree, basically kind of what like Japan's done for the last 20, I actually think it's 30 years now, is that they had like a massive market boom in the late 1980s. And they also had like a very old generation, like their population was aging, and they couldn't let the assets just collapse because you'd wipe out the retirement of virtually the whole population. And we are now in a similar situation where we have an aging population and they can't handle like the stock market dropping by 80% or the real estate market dropping by 50%. Like that's all their retirement. And so what kind of like Japan's done is that they basically every day they go and they buy bonds and they print money and stuff like that to keep these assets artificially inflated. And I have a feeling that's going to be the exact same thing that our government's going to push to do. I also think that the platinum in particular is going to benefit from increasing emissions regulations. I've gotten very bullish on the platinum group metals overall. And they're just, it's basically, we kind of have moving into a world where governments are more and more against kind of like global warming, carbon, all this kind of stuff. And they believe that like gasoline vehicles are killing the world. But gasoline vehicles are kind of like the most economical for people to own and just most convenient and stuff like that. So what they're going to do, in my opinion, is that they're going to increase emissions regulations, and this is going to increase the demand for catalytic converters. We're seeing that with like Europe, India, China right now, is that they're increasing their emissions regulations for their vehicles just to kind of deal with like smog and air pollution and stuff like that. And it's a very illiquid market. It's a very tight market. The supply of platinum group metals, it's actually forecast to decline, and there's not a whole lot of ability for new mines to come into production, increased mine rates and stuff like that, because a lot of these mines are deep underground and it's very labor intensive, and you can really only get so much ore out at a time with so many people and still do it relatively safely. So I really just don't see production increasing, but I do see demand dramatically increasing. I also think that investors are likely to find appeal in platinum as it continues to go up in price. Like if platinum's outperforming silver and gold, investors will start to recognize that, and they could also see that it's historically undervalued. And so I think that builds on itself. So how to invest and the pitfalls to avoid? I believe that you should avoid synthetic products like pool allocated or unallocated purchases. I think the Perth Mint is kind of showing what's been happening with that kind of system falling apart. And then I believe it's John Adams even got like a cease and desist letter from Kitco for kind of talking about the same things. So I feel like a lot of these kind of bullion dealers have these unallocated, pool allocated accounts that you're going to kind of see that it's like when the tide goes out, kind of like Warren Buffett saying, you see who's been swimming naked. So it's like when problems in the system hit, it's like you're going to be seeing who was actually doing the right thing and who wasn't, and it just doesn't seem like a good risk for me like to take to go into these synthetic products, even if you're getting like free storage fees. I think that 1 ounce coins and bars at low premiums are probably the best way to go, and just historically a very anti-fragile investment. That like a 1 ounce platinum coin is still going to have value 1,000 years from now, whereas like the $1,200 in U.S. Canadian bills or whatever, that's just going to have historical value. Like it's not going to actually have any intrinsic value if you go 1,000 years from now. I also think that the platinum group metals producers like Sibanye-Stillwater and Impala Platinum are great value and offer tremendous exposure to increasing platinum price. So right now, it's like I've done some calculations and I'm projecting their forward PE ratios to be around 2. So they're about $15 billion companies. And I think Sibanye and Stillwater's set to make about $6 to $7 billion, and Impala's set to make about $8 billion in profits for 2021. So I think they're absolutely tremendous. And that's primarily because the rhodium and palladium price has gone up so significantly that's where they're making all their money. But it's like if you have increasing platinum price, it's only going to help these companies. And I think that it's just going to be, there's going to be a time when they become more in vogue and the whole platinum group metal space is like where investors want to be. I believe that this platinum bull market will take about 5 to 15 years to fully play itself out. And just because it's cheap now doesn't mean it'll go up. There's a very real possibility that it can continue to go down. It's like markets can stay irrational longer than you can stay solvent. But with rhodium prices and palladium prices so high, there's going to be a big push for the catalytic converter creators to figure out, hey, how can we substitute one of these metals for platinum, just because platinum's so much cheaper. But these things do take a lot of time, and so it'll be tough to say how that transition happens. But yeah, I think that platinum and the platinum miners are definitely a good place to be and a great investment to be looking for. Thanks for watching.